All right, guys, a very, very warm welcome. I am Devang Mehra from the Financial Analyst, and it's really good to be back. First of all, I really missed each and every one of you, hearing from each and every one of you for the last 1.5 months. We were on a hiatus, busy with personal commitments. We were ongoing doing business expansions. So because of all of that, we could not spend a lot of time on social media, and our mentorship slots were sold out and booked, so we were not entertaining any other slots. So now everything's been done. We are back in full swing in the financial markets. So if you all missed us, if you all missed our analysis and our videos, let me know in the comment section below. And also don't forget to click on that bell icon so that you know when we are dropping a new video, because starting from today, I'm going to do a lot of effort on our YouTube community, dropping more videos, more educational content, so you all can learn like the old days. So do click on that bell icon. So without further ado, guys, let's get started. Let's not waste too much time. It's 12 a.m. in Indian Standard Time. The date is Tuesday, 9th March 2021. So just let's look at the global markets, what's happening. So what we'll do is we'll look at the global markets. What my agenda for today is to give you an idea what to expect for March 2021, the end of the financial year, and what to expect tomorrow, more importantly, which is Tuesday. Let's have a look at the global markets first. Dow Jones exceptionally well. It's given a breakout as of right now. This could be rejected of the highs. I think we will cool off the highs going into the closing of American markets. But as of right now, Dow has given a breakout. It's doing very, very strong. And it's very, very important to understand Dow has gone up about 1,400 points from 3,600 all the way to 32,000, the record highs of Dow. So America is doing very well. And why is America doing well? That's something I will tell you in the coming session, in the coming meeting. S&P 500 is also doing well. Why? A lot of people ask me, why is Dow Jones doing so good and S&P, why is it still at lows? The reason is that S&P 500 gains are being withheld by the IT companies in America, which we'll come to in a bit, which is nothing but US 100 NASDAQ. So S&P 500 has done quite a good job. It's about roughly 1% odd number. It's up, and NASDAQ, as like the other days, it's been down. It's under pressure. IT stocks are not doing good. Also in India, IT is underperforming. We haven't seen any good movements in the IT sector. I think the reason for that would be ridiculous valuations in America. All the IT companies have given you so much gains in the last couple of months, and I think there's a cool off that's happening in the IT sector before it resumes the rally, which it always does. So Nasdaq is one of the reasons why the S&P is staying low. It's not able to catch up and break the all-time highs. So my understanding would be from this that when Nasdaq starts to go up and start its rally again, resume the rally again, I think that will be the time when the entire global markets, or S&P for that matter of fact, would start to increase. But this should happen soon. The reason is that dollar index has given a very, very good breakout. Um, all of you know I track the dollar index very closely. So I've drawn this trend line all the way from July, 30th June 2020, and we were never able to break this trend line. And just a couple of sessions back on 3rd of March, we have successfully broken this trend line, sustained above this trend line. So currently the DXY stands at 92.288, which is about a 4-month high on the dollar index. So that's a very good thing. So the dollar index becoming stronger means that the IT companies should start to perform now. The consolidation phase should start to get over, and we could start to see some good movements coming into the IT sector all over the world. That's one understanding. Second thing is that dollar index becoming stronger is also a sign of FIIs pulling out money from the Indian markets. The very simple reason is that when the dollar becomes stronger, the emerging markets are risky assets for your FII. So they will pull money out of risky assets and they will put money in their own economy. So it could be American treasury bills, etc. So dollar becoming stronger is also a warning signal, which I will come to in a bit by the end of the presentation. So it's also a warning signal for the equity markets. So my understanding from this would be, if dollar starts to maintain highs, it could be meaning that the Indian markets could be topping out. So all of that things have to be kept in mind, which we will come to in a bit of time. Also, something we have to understand what's been happening in the last couple of days before I go on to the other global markets. The US Treasury, the 10-year notes, the yields have gone up tremendously. And all of you remember what happened on the 25th of February. US yields went up abnormally high. It went up about 9.5%. As you can see on the screen, 9.29% was the gain that we saw on the American 10-year note yields. So what is the correlation of the yields and equity markets? Let me explain that to you with a very, very simple example. My goal is not to make you mug up what to do tomorrow, what are the calls that you can enter tomorrow. But my main idea why I come on YouTube, and my main idea is to help you out so that you can become independent investors or traders. So try to understand this. Let's take an example, very, very simple example of fixed deposits in India. I think right now the rate cycle is very low. So I think the rates of FDs would be around 5.5 to 6% in India, because the rate cycle is low. Repo rate is about 4% in India. So the rates are low. So FDs are currently not very attractive. It is much more attractive to invest in the Indian stock market because that's giving you much more return. Now, let's take a very raw example. Let's say overnight. What happened in America, let's take that same example. Let's say overnight, the FD rates from 6% go all the way to 7.5%. Think about it for a minute. Is that going to become attractive to you? So if overnight your FD rates, extremely go higher, something will come to your mind, and that thought would be, let's try to pull out some money from equity markets. Let's pull out some money from the banks and, put money in the fixed deposits. Why? Because number one, it's a safe asset, and you are getting abnormally high return. That's 7.5% in a year, which is very, very good, which is very, very high. So when the FD rates will go up eventually, this is going to be poor for your equity markets. Or when the rate cycle starts to improve, when the repo rate starts to increase, when the interest rates start to increase, your money will be pulled out of the equity markets, because people will find it much more meaningful to invest in the other alternate investment which are safe. This is exactly what happened in America. Your bond yields went up 11% on 25th February. And that is why we saw a very big fall that happened on Indian markets and all the other markets on 26th February. The next day, immediately. This is exactly what happened. This date, 26th February. We saw a very, very big fall in India. And this is one correlation that I would like you all to keep in mind. So if further on the yields on the 10-year notes in America start to go higher, I want you all to be cautious when it comes to the Indian markets. Another thing I already told you is dollar becoming very, very strong. Yes, we are seeing good highs on the American markets, but that does not mean that even Indian markets have to follow. Yes, they will follow. When dollar becomes strong, it does not mean on intraday you become bearish. But if you look from a longer perspective, this is like a warning signal that is coming to us in the Indian markets. One very important point that I want to add is that the FIIs have been pulling out money. I think they've already pulled out about 6,500 crores in the last 7-8 sessions in March. So that is one very concerning matter. FIIs have been net buyers, and their proportions of longs have been much, much higher, about 75%, continuing from the last 1-2 months. But that has considerably gone down now. And right now they are net sellers in the Indian equity markets. I think roughly about 6,500 crores. So you all also see that in cash segment, they have been selling every single day. So this is the reason for this is what I've just explained to you, that the note yields are becoming higher and your dollar index is becoming strong. So which is helping them to pull out some money to book their profits and, put this money in some other markets like America. So that is something I want you all to keep in mind. I also will be stressing on the data that's come in. But before that let's just look at the American markets, other markets. UK is doing all right. Nothing very interesting happening in UK. FTSE 100. My understanding is that in UK also we are in a very good range. You can see a good trend line resistance coming in over here and a good support coming in over here. So a very good symmetrical triangle formation or a good range has been formed in UK. So whichever side the range breaks, we can expect a very good momentum. And generally, when a symmetrical triangle is formed, whatever is the maximum vertical distance in that symmetrical triangle, that will be achieved whichever side it breaks, whether it's up or whether it's down. So whichever side it breaks, you can expect this bigger movement happening in UK. So we are still range bound in UK. So nothing can be expected as of now. In the German markets, on a different hand, we have seen a very good range breakout. So Germany markets are strong. Things are looking good here and expected to continue further on. Couple of I'm just going to use my phone. I'm going to send the data to my laptop so I can show you the data because it's very, very important. I want to show some very interesting observations that have come in the data. Just give me a second. I'll be airdrop. So the markets have been difficult. The markets in the last couple of days have been very, very difficult. I'm not being able to show the data, but let me. I'll try it again. I hope this thing works. But overall, till that doesn't work, overall markets have been difficult, guys. I'll come to the Indian markets now. The markets have been overall quite difficult to trade. The reason is that there is so much happening, and our markets are not able to understand what the direction needs to be followed. You know, on Friday we had on Thursday, sorry, we had the treasury yields concept going on. On Friday, when everyone started to become bearish, on Friday what happened was that everyone we saw that $1.9 trillion package stimulus in America is finally being approved by the House and the Senate with some minor changes, but it's being approved. Also, the non-farm payroll data was out. If you all are tracking the global markets, if you're tracking the news that's out, so we also had the non-farm non-farm data, the labor data, which is out. So what is the non-farm labor data? So as a layman, you can understand it's the employment data. So when I say non-farm, it means employment in all the other sectors like construction, manufacturing, etc. So what was expected was that on Friday, that about 175,000 people, if my numbers are right, were the people expected to be employed in the non-farm sector additions, but the actual figure that came out was 350,000. So it was a much better than expected number. So this is another reason why the American markets are doing very, very well, and people are becoming very bullish. The news flow is good. Things are becoming better in America. And one thing, this was a news flow also in China on Sunday. Another very important update was out. China, we had the export data, which was out on Sunday, and I think it tripled. It was a 50% jump in the export numbers. So that was taken very well today. That's the reason why the Indian markets opened with a significant gap up in the morning. But the problem that is happening is, I want you to understand some very, very basic concepts. What you are seeing right now in America on the SGX Nifty, it is indicating a good gap up. But please try to understand that, all these global markets, they can help you open, but they will not help you sustain. That's a very important point that I want to add. American markets, if they are showing you that they are trading higher, like Friday, American markets are up 500 points, but did Indian markets sustain up and give you a breakout today? No, that didn't happen because of several reasons. So even tomorrow, because of the data that I'm seeing, you could get a gap up. A good 70-80 point gap up could be on the cards, and it looks like it's on the cards. But that does not mean that markets are going to travel 300-400 points tomorrow because everything is going up. So just keep that point in mind. So all global markets can only help you to open. But please remember, it is not important where you open. It is important where you close, because the opening in the market is done by your retailers like you and me, but the closing is done by professionals on the Dalal Street. That is something you have to keep in mind. Also, please understand, any movement in the market after 9:30 or 9:15 is generally by your public, right? People like you and me. So that is never sustainable. But any price movements happening after 1:30 is generally carried on by institutions. So all these big brokers, big institutions, so who they generally place orders, the big bulk orders and all around after 1:30 in that window. So the movements that you see there, that are sustainable, because that shows you that the bigger people are getting involved in the market. So whichever way the market moves after 1:30, that could be considered as a good a good sustainable movement in the market. That's what helps you to decide, will it be a gap up or a gap down in the markets tomorrow or not. So now let's talk about the Indian markets. I want to start off with Bank Nifty first. Banks in India have been considerably weaker. The metal sector has been doing good. I think Reliance is another company which is holding Nifty on the highs, but banks have been not doing very well in the recent past. The reason why is, you have to understand one very simple thing about the equity markets. They move in phases. What do I mean by phases? So first we have something we call an expansion phase. So whenever, there is some kind of a news event, so let's say there is an XX news event happening over here. So this will lead to an expansion phase. Your markets, your stock, your index, whatever you're trading will expand. So when that expansion has happened, that's a time where you can make really good money in the markets. Once that is done, this leads to a contraction phase. Contraction is nothing but profit booking taking place by people who are buying the shares when the rally started. So let's say, smart money, intelligent money like mutual funds, FIIs, who are buying the share at this place, they will start to book the profits. So contraction does not mean a reversal. It's basically your smart money booking profits at a higher level because they have bought things at a lower level. So what happens is after the contraction phase, markets again decide, do I want to expand on the upper side or do I want to expand on the lower side? This is exactly what is we are facing in the markets right now. We had a budget over here in February. We saw a very good expansion in the equity markets, and after mid February, we have seen a good contraction taking place in the equity markets. One very simple understanding is that whenever you are in a contraction phase, or let me put it in other words, consolidation in range markets, whenever you are in trending markets means you can trail stop loss, you can go for bigger profits. But when you are in a range bound market, your strategy will be you buy low, sell high, buy low, sell high. That's all. You cannot trail profits. You cannot trail positions. You have to, be satisfied with what you're getting in the markets. Small money, maybe 1:1 risk reward, 1.5:1 risk reward. I think that would suffice. But that will not be the case in a trending market. So you have to keep these points in mind. Just like I'm speaking right now, as I said, I'm expecting American markets to come off highs. I don't think right now the move will sustain. So I'll tell you about all of this. It's going to be a little bit long lecture. So I'll tell you about everything, what I've planned, what positions I'm going to be taking in the next couple of days. So right now we are in a range bound market. So when I say I'm in a range bound market, this means that I cannot be an aggressive trader. This is where people go wrong. When markets are in the range, people start trading aggressively and they lose money. They simply lose money. And when the markets actually break out, they do not have any money left. I don't want you to do that. But you know right now that on a daily chart on Bank Nifty, I have a range established, meaning that everyone who is a buyer in the market has a stop loss at 34,750. Everyone who is a seller in the market has a stop loss somewhere around 36,300. So we are in a good 1500 point range on Bank Nifty. Unless until this range is broken, you cannot expect any big movements happening. Obviously, whenever this range breaks, you will get a good 1200 point move on either side, whichever side it breaks. That's a given. But it's very, very important that you should wait, that you should be patient of this range being broken. So as long as the range does not break, you have to play in very small quantity because there is no direction in the markets. Also, because of so much news flow coming in on every single day, we are opening every single day gap up, gap down. And you can see, I think majority of the candles are dojis, indicating volatile trades. As I said, volatile trades, indecisive trades. People are not able to decide because we are in a range. Forces of demand and supply are pushing prices between. You cannot expect a breakout to happen so easily. So let me open the 15-minute chart of Bank Nifty. I hope that concept is clear. So my goal right now is I am not trading heavily right now. The reason is, yes, we are getting good moves. On an average, every single day, we are getting a good 700 point movement on Bank Nifty. But the point is there any clear direction? Because I do not know what's the clear direction in the market, I do not want to just splurge my money and waste the money. Yes, what you could do is always do not eat the whole pie. I want you to just grab a slice of the pie. What I mean by that is, if you know every single day markets Bank Nifty is moving 700 points, why can't you just be happy with 1500 points of profit with good quantity? So when you are in a range, my focus will be, my advice to you will be, try to scalp it out. As long as this range maintains, I'm repeating myself again because it's very, very important. This is the entire reason why people fail in the market, because they don't understand this point. Every day when you come to the market, you want to make money, but that's not how it is. If the markets are in a range, you have to scalp it out. You cannot be a person who says, let's go, let's trade a breakout, let's go, because it's going to fail. It is going to fail eventually. So my understanding is, another very, very simple something people are asking me for a long time. 35,000 level. What's the secret behind this level? You can see that this level has been multiply tested for the past couple of sessions. So when the level is multiply tested, this level becomes weak. Always remember, markets will never break level in one go like this. That could happen, but that is not what you have to trade. I want you all to be able to trade that level which is being tested multiple times, and when that level breaks, I want you to trade that. Very simple example will be, if I have an iPhone, right? If I want to break the iPhone, if I drop the iPhone, it's not going to break. It will, maybe the screen breaks, but the phone will be functional. But if I throw it 10 times, it's going to surely break. Same thing with support and resistance. I have a very, very strong support at 35,000, and this level is not being able to break. The very simple reason why we are not able to break, you can see the rejections coming in. So many rejections are coming in. The reason why we are not able to break 35,000 is because all these falls which are happening towards 35,000 are happening in the second half of the market. And in the second half of the market, the move has already been done. Bank Nifty has already traveled 700 points. You can't expect it to travel 1,000 points. What I'm trying to say is that you can see over here on this date, you opened higher, you went up, you again went down. So this fall that was happened in the second half. The momentum was gone. Same is the case on the second. You opened higher, you went up, again you went down. So you cannot expect to sell market below that level. The very simple reason is because already the move is done. It's already given you a good profit. You cannot expect it. The same was the reason even today. You went up, in the second half you went down, so it failed. Same was on the 5th of March. You opened over here and the move was already done. It happened in the second half. What I'm trying to say is, please remember this point very, very carefully. My understanding about the markets right now is, if you want to be short on the markets, if you think 35,000 level will break, and if 35,000 level breaks on a closing basis, we will see a very big fall. Even 33,000 can come. That's a given. But if this level wants to break, it is important that it breaks in the first 1 hour of the markets. So, for example, what would be the plan for tomorrow? Let me be very clear. If the markets open flat, or if the markets are opening gap down or gap up, basically in this range, and then in the first 1 hour, 35,000 level is knocked off, you can be an aggressive seller in the market. As simple as that. But it's very important. Number one, it should happen in the first 1 hour. Number two, you open in the flattish range. But if you are opening in a gap up area, so what we are seeing right now is a gap up could be achieved. If you are opening gap up like you did today, you can see that the markets become sideways. Why? Because there is heavy call writing at higher levels. That's the reason why upper levels are not able to sustain. Right now, 35,800, extremely, extremely strong resistance. We failed over here, we failed over here, we failed over here, we also failed over here. So this will become a strong resistance. Another plan could be what you could do. I'm not going to be doing that, but what you could do is, if markets open a good gap up somewhere around 35,800, you could try to go short here with a very small SL of 50-60 points on Bank Nifty. That's another thing that you could try. Please remember, all these ideas that I'm giving are my personal ideas. I have the right to be wrong. So please consult your financial advisor before taking any entry. So this is the idea about Bank Nifty. I hope things are clear. If you open flattish, or if you open in gap down, that's the best idea that markets can fall. If in the first 1 hour markets collapse, you have to be aggressive sellers, trail the stop losses, because we will be getting a big fall. At the same time, if 35,800, this needs to be knocked off right now, even 36,400. So we are in this range. So this level needs to be knocked off in the first 1 hour itself. If it's not knocked off in the first 1 hour, expect some kind of sideways market. Again, expect some kind of a volatile, indecisive trade. That is what my understanding would be of Bank Nifty. Talking about Nifty, let's see what's happening in Nifty. Right now, again, as I said, Nifty has also been stuck in a box. When you are stuck in a box, you need to scalp. If you are not bang on with your exits, you're not going to make money eventually. For example, right now, all the swing traders on the index are not making a lot of money. The reason is they think it's a breakdown, but the next things go up, then they again go down. So basically, your premiums are getting decayed. So just like I said, we are getting off highs in America. Things are correcting in America, because I'm just trying to get the data out to you. the data is not looking very good, dollar becoming strong, it is a sign of warning also. In Nifty, to conclude, Nifty is also stuck in the range. I want the range to be broken, then only I can be an aggressive trader. As long as the range is intact, I want you all to maintain caution. I want you all to maintain small position sizing, because it's about safety in the market. You have to be safe, otherwise you will lose out the money, and when the move actually happens, you will not be able to take part. Please remember this. You can become aggressive sellers below, I think, 14,900, and also 14,800 is a very, very strong support. So 14,900, very strong support. 14,800 is also very strong support. So these levels have to be knocked off. So if tomorrow markets are opening flattish, if the markets are opening a slight gap down, slight gap up, and 14,900 is broken in the very first 1 hour, that could be a signal that markets really want to go down. Because today it's not a very good closing that I've seen on the markets, but it's important. Please wait before taking an action. Number two, we also have seen a good low high, low low structure. So we are getting some pressure. If this trend line breaks tomorrow on the gap up, and even these levels break 15,100, you can try to buy some calls and scalp your way out to 100 point easily on Nifty. I think that could be achieved. But please remember, I'm saying huge call writing is existing at higher levels. We are getting a lot of call writing at the upper levels. So please, whatever you are doing, do not go for big movements unless until the range breaks. Try to go for small profits. You could increase your quantity marginally, but please go for small profits. Don't go for the entire pie. Go for that one slice of pie. If you open flattish and break this level in one go in the first 1 hour, you can do an aggressive sell. But on the upside, we have good resistances also coming in. So if you are opening gap up and you get a good, let's say, shooting star candle, you can try to short the market also with a very small stop loss, and aim for a gap filling kind of a trade. So this is my idea about Nifty and Bank Nifty. Still, there is confusion in the market. There is no clear trend. We are awaiting when this contraction phase is getting over, and whenever that trending phase starts, we can become aggressive players in the market. So till then, try to be in equity segment. We are getting good results in metal sector, and all the other sectors that are performing. Try to play in stock options. I think that is a much safer approach as of now. If I show you the levels of Bank Nifty right now, I'm more interested to trade Bank Nifty. The very reason is that I'm at a very significant level. 35k has been tested multiple times, so I'm getting a feeling that this might break if I open lower tomorrow. It's important. So let's just see the Bank Nifty stocks. HDFC Bank. Let's try to see what HDFC Bank is doing. HDFC Bank is at a very, very poor level right now. So we've got a very poor closing. I'll show you the daily charts so you'll get a better understanding of what I'm trying to say. HDFC Bank also in a range, and you can see right now that it has been, it's given a small breakdown today. So if HDFC Bank also opens flat, you could see some kind of sell-off taking place in the first half an hour, in the first 1 hour. If I give you the levels of HDFC Bank, but it's important again where it opens. If it opens gap down 20 points, then the move is gone. Or if it opens a big gap up, then the move is gone. It's important that for this, it should open flattish. Something very important is that there is no level below 1520. I think the first target can come 1500, and below this 1480 can be the target. So we can see a good fall in HDFC Bank. So provided where markets open, and all of you already know, if HDFC Bank tumbles down 10 points, that equates to 200 points on Bank Nifty roughly. So just keep that point in mind, whoever is trading the index, not the HDFC Bank. So below 1520 on HDFC Bank, we will become weak. So make sure you open flattish and you can try to trade that. Second is ICICI Bank. It's a very good constituent also of the Bank Nifty. ICICI Bank is also not doing very well. If I open the daily chart, let's get an understanding quickly. It's also been closing below, I think, the 20 MA as well. All the banks are, under pressure. We are below 20 MAs. We are very close to crucial support. So if these supports break, there is no level in ICICI till 560. So I think below 600, we can start to aggressively sell ICICI Bank also. Right now we're at 608. So it's again important where you open. If you open at 615, then the trade is gone. But if you open at 603, and then you break 600, then we can potentially see a good trade. So I think if it goes below 600, we can see 590 as first target, followed by 560, because then there's no level after that. Then we have SBI. SBI has done quite significantly well in the last session. SBI and is looking good. The word around the block is things are looking good on SBI. But SBI could, if Bank Nifty is up tomorrow, if you see a good momentum in Bank Nifty tomorrow, you could expect SBI to touch about 397 to 400 levels also in intraday tomorrow. So keep that point in mind. On the selling side, please only sell below the lows, because below that low we can see a good gap filling trade happening. So I've given you both the views. If you cross the highs of SBI, you could see a good trend on SBI on the upside. I think 396 to 400 rupees can be achieved intraday, but that again depends upon how our Indian markets are performing tomorrow. And Kotak Bank is also doing well. It was underperforming for a long time, and it's given you some good movement on the upside. Kotak is doing fairly well. It's given the breakout. It's given a very good indecision candle. Now that's the big problem. Whenever you get a doji on the chart, that's the problem. Try to understand this concept also. So now, if you want to be an aggressive buyer in Kotak, you have to buy only above this level. If you want to be an aggressive seller in Kotak, you have to sell below this level. So as long as the doji range is maintained, you cannot do anything in Kotak. If you do anything in Kotak, you are basically depending upon God. There is no analysis that you've done. You're just basically depending upon luck. So it's better you switch to another share. So Kotak is not a share for tomorrow. You can switch to other companies. Let's have a look at Axis Bank, and then we'll conclude the meeting. Axis Bank is doing all right. Again, we are at, you can see a very good support is being held in Axis. So if this support is broken, you could see a fall. So what the thing that I'm understanding is that markets, especially Bank Nifty, is weak right now. And because all the stocks in Bank Nifty are at crucial supports. If dollar index goes up, if your inflation starts to worry you, as it is already doing, if you get a flattish opening, you could see a fall in Bank Nifty. So just keep these points in mind. Make sure these levels break, and then you can trade. And if you want to be an aggressive seller, let 35K break in the first 1 hour, and then I'll give you the permission to go aggressive short. That's it for now, guys. I'll be uploading another video in the next 10-20 minutes about the data, and you can see that and get an understanding how I interpret the data. And I hope things work out for you tomorrow. And click on that bell icon, click on that like photo, and comment if you enjoyed my analysis. Thank you so much.